Yesterday, the Dow Jones Industrial Average closed in on the 32,000 mark. That's the highest it's ever been. It closed at a record of 31,961.86, up 1.35%. It had that upward trend in common with the S&P 500 and the NASDAQ. Let's talk about where the opportunity exists for you. But first, before we do that, let's understand why the markets went up. The U.S. stock market turned higher Wednesday after Federal Reserve Chairman Jerome Powell signaled that the bank isn't about to alter its monetary policy, helping push the Dow Jones Industrial Average to a record. Couple of things here. All right. There's really no better place to get your money working for you right now than in something associated with the stock market. So you can either put your money in the markets and have it, perform at some level of risk, depending on what companies you're investing in. You could also put it in a cash value life insurance policy, an IUL that is pegged to the S&P 500. You can get some performance out of that as well, plus other benefits. But if you're not going to do that, there are scant other ways to make your money work for you. Sure, you can put it in real estate, but that's a different equation altogether. When we're talking about these paper assets, stocks, insurance policies, bonds, and that sort of thing, bonds and savings accounts just aren't where it's at right now in terms of return on investment. So when Powell says he doesn't see any changes, he's basically saying that he's not going to be adjusting the interest rates up anytime soon. That's a signal to investors that, hey, right now the stock market is one of a few games in town where we can make this money really work for us. Now, let me go over very quickly. Again, the Fed, it's important for you to remember that the Fed handles monetary policy. The Congress and the president handle fiscal policy. Fiscal policy is characterized by tax increases or decreases, while the Fed's monetary policy control is characterized by manipulation of the money supply, manipulation of the interest rate, and the ability to borrow securities, or to put them on the market. So those are the differences between fiscal policy and monetary policy. The Fed controls that key interest rate. A lot of people get it confused. They think the Fed is controlling the Fed funds rate. The Fed controls the discount rate. The Fed funds rate is actually the rates that banks and financial institutions charge each other for overnight transactions. It's kind of confusing. All right, let's figure out where the opportunity in this lies for you. If we scroll down here, while the Fed has stuck to the same message since the pandemic hit, the strength of the recovery could prompt it to change course sooner than many investors have been expecting, said Paul O'Connor, head of multi-asset management at Janus Henderson Investors. Markets are expecting that to be a 2022 story. However, we are seeing sizable upgrades to U.S. GDP. Somewhere in the middle of this year, the discussion around tapering is going to have to take place, he said. Tapering meaning raising that interest rate. So here's some opportunity potentially for you. Again, you got to do your due diligence. There's a lot of moving parts here. You could look at this as an opportunity to hold some cash and to wait on the sidelines, because markets are at a high right now. Many of these stocks are trading at highs. If you wait on the sidelines with some money, wait for this conversation to take place, see what the middle of the year looks like, because if the Fed does raise or win, because they really don't have too much in the way of choice in terms of a downward angle on the interest rate, on that discount rate. But wait until they start talking about potentially raising that rate. You're going to see quite likely some decreases across the board in the major indices. And that might present a buying opportunity for you, all things being equal and you doing your due diligence. So you saw it between yesterday and today, actually. Yesterday, the markets, they did this and dipped down early. But as Powell reassured the markets, they rose throughout the day today. So you can expect probably an inverse of that to occur when he starts talking about raising rates, possibly later on this year.